Welcome to the Market Front Lines. I'm Lindsay Melchek. Royalties is staking its claim in the renewable energy revolution, but not by building projects or taking operational risk. They're capturing value through royalties across the sector, positioning themselves to benefit from growth while protecting investors from the volatility most energy plays face. Now, I'm sitting down with the CEO of Royalties, Bernard Tan. Bernard, it's so great to have you here with us. Thank you for joining us.
Thanks for having me again, Lindsay.
Well, I do want to start right off the bat with the recent Canadian federal budget. Let's go there, shall we? Now, there were some bold moves with renewables. And how has that actually shaped the landscape for Royalties and the opportunities that you're looking at?
Yeah, so it's quite interesting because my answer could have changed, depending on how the vote went yesterday. But I would say all in all, I would say it's neutral for the sector itself, and probably, I think, on a long-term basis, good for our royalties. So an important aspect of what got passed yesterday was the fact that these investment tax credits that have been so important for accelerating and encouraging the adoption of renewables, that all passed. It provides a lot of certainty to the industry, provides a lot of certainty for our clients to be able to continue and grow. The other aspect that was great to see in the budget was the commitments and the investments towards grid infrastructure. That is a much longer term play by the federal government, as you know, trying to build transmission lines across, the vast areas of Canada can be extremely time consuming and lots of capital is needed. And it's nice to see that commitment. I would say the one downside is that there probably could have been more policies to encourage, more capital, especially private capital. And that's really where things we've seen done very successfully in the mining sector, in the healthcare sector, in the tech sector, where you're providing investors with tax credits, flow-throughs, that have been extremely positive. So unfortunately, that wasn't in this current budget, but I think to see that the federal government is taking that steps, and, I think I'd like to say it's baby steps. We hope to continue to see that, continuation with our governments.
Okay, so we all have seen it. Canadians, Canada actually, they're moving in one direction with that. But the U.S. is moving in a totally other direction. I mean, they've really pulled back on a lot of their renewables, and I think that has a lot to do with policy change. So how does that affect the opportunities that you're now looking at south of the border?
Yeah. So I think from a sector-wise, for the renewable sector in the U.S., it's definitely very strained at the moment. The One Big Beautiful Bill accelerated the expiration of certain investment tax credits, in particular solar and wind. However, what it did not accelerate and it actually preserved and encouraged was the investment tax credits in things like geothermal, energy storage, hydrogen, nuclear. So it is a bit of a two-step system that we are seeing with the U.S. federal government. The nice thing is that sort of expiration of credit has created a little bit of a gold rush with our clients. So since that time, I would say we have seen a tremendous amount of opportunities, a lot of inbound calls from our existing clients, new clients that really need that financing, that royalty-based financing, because they have to get their projects online. So it's really opened up a tremendous amount of opportunities. The opportunities are quite interesting, very good economics. We focus mostly on operational or ready-to-build projects. So those are the types of projects that, are definitely we're looking at currently.
Well, let's push that just a little bit further. I mean, I have been watching your pipeline, and some of those projects, many of those projects, they really stand out here. Now, the question, though, is if you can walk us through some of the specific opportunities that you're evaluating right now and really I mean, why do you think those are a game changer for your portfolio?
Well, it's first and foremost, the opportunities that we pursue are generally operational or, as I said, near term, ready to build in construction. So these are projects that are going to produce cash flow very quickly. So for us, in terms of, obviously we have a number of different clients and prospective clients, and you never know which one actually crosses the line. So I can't really sort of discuss specific but I can definitely provide sort of the types of projects that we're currently looking at. So one is an acquisition capital that we provide to a prospective client to acquire an operating portfolio. So this is very interesting. It's, the wind farm's completely built. It's generating cash. With the current environment in the US, these assets are depressed. So you're buying them cheap. We're helping our clients do that. Obviously, we have to get through the due diligence and work through all the difference. But they're also not impacted by the current policies by the administration. One of the things that's also currently happening in the US is that with the onset of, we hear about the hyperscalers and the data centers, energy prices, electricity prices are going up. So if you're acquiring an asset that has increasing economics, that is extremely attractive for our client, but also for our investment. Other opportunities that we're also looking at, construction capital, because there is this rush to get projects online. So, that pool of opportunities has definitely expanded for us, especially in the context of the US. The sector itself doesn't look so good, but our opportunity set definitely does.
That's an interesting thing that you said where, the electricity bills, they're all going up. I was just speaking with a friend, just the other day, and he's down in the States and he's in the solar sector. And I said, there's a lot of scrutiny in this sector right now. And how is that looking down in the States? Like, how are you seeing that? And he said, you know what? It's not really affecting us because these households, they're paying so much by these electricity companies that they're now looking at the alternatives. So there's a big thing up front, obviously, but long term, they're saving so much more.
Yeah, and you're absolutely right. And the nice thing is that with the removal of some of these tax credits, it allows the actual economics of energy prices and electricity prices to work itself out through the system. So even though I think the sector is going through some hurt right now in the short term, I think longer term, that's going to do is really improve the economics and build that capacity that the US and also North America really needs. So it's one of those things where only in hindsight can you see that, hey, this is actually a good time to be investing into the sector.
Absolutely. All right, Bernard. Well, I'm going to just shift gears here for a second. Investors have very clearly noticed you have not announced a dividend for this quarter yet. So, can you share with us the timing behind that? I mean, is it to do with the new opportunities, or is there another strategy at play here that investors really need to understand?
Yeah, you're absolutely right. It has, I think the dividend is definitely a short term. For us, we've consistently paid a dividend over time. But we are at one of those very interesting sort of intersection. The opportunities that we're looking at have very attractive economics. It is very, a lot of the royalties are very long term. Obviously, as a small company, we have to be very careful and look at where capital allocation. So we are looking at it, really, from the context of really a long term, whether we can actually get more for the future. Because really, from the management and board's perspective, that is our fiduciary duty to make sure that the longevity of the company is continuously improving.
Yeah.
So that is one aspect I would say, we are considering because of these interesting opportunities. Now they're much bigger and there's a lot of them. So trying to vet through is a work in process. I would say the other aspect as well is that with the downturn in the renewable sector itself, the tide has gone out and all the boats are kind of at a much lower level right now. So a lot of share prices, including some of the major renewable companies, have been hit pretty hard. So one of the things, obviously with looking at that pool of capital that we historically have paid with dividends, should we be buying shares back? We have not yet announced. Obviously, those are considerations. If you look at the dividend we've been consistently paying, 4 cents a year, can we move it up by 4 cents, through a buyback program? So those are some of the things that internally as a company we are looking at and considering. Obviously, no decisions have currently been made. Otherwise, we would announce.
Hold up. No decisions have been made quite yet. Just brainstorming.
Yes. So there are a lot of different considerations. So we want to make sure that when we do make that decision, it is in the best interest of shareholders long term.
Okay, fair enough.
Yeah.
Let's flip back then and let's talk about these significant milestones that you have hit, including the repayment back of your Series 1 green bond. That's pretty big. Are you planning another series, and what other upcoming milestones should investors be watching that could actually really affect positively, not just the company, but shareholders as well?
Yeah. Well, it's, again, tough and great question. We definitely have a lot of, I think it's one of the big accomplishments. We took that capital, we did what we said we would do, and we returned that capital. Our Series 1 green bond holders, we're definitely very appreciative. And next question is, are you guys doing another one? We are looking at it, I have to say. One of the considerations, historically, we've raised about, 10 to 20 million. Some of these opportunities that, we've been talking about are much larger in terms of ticket size. So for us, part of that growth aspect of the company is how do we scale? How do we make bigger, do larger deals, do more deals? So that is one of the considerations that we're currently looking at vis-a-vis the green bonds, other forms of capital that are available that we're looking at to be able to execute on these opportunities. For us, that's really what drives the future value of the company. We got to execute. We got to put these portfolio of investments in underneath our corporate umbrella, and then we have to get bigger and bigger. Of course, we want to do that accretively to make sure that it is beneficial to our shareholders. To make sure that we're not focused on the short term, but really more focused on the long term.
All of that makes sense. And thank you for all of that. Bernard, it's been such a great conversation. Thanks for coming to sit with me today.
Thanks for having me again, Lindsay, and look forward to the next one.
You betcha. Absolutely. Again, that was Bernard Tan, CEO of RE Royalties, trading on the TSXV as RE and on the OTCQX as RROYF. Now, you can learn more about their work and opportunities at reroyalties.com. I'm Lindsay Melchick with Abaton Media. Join us next time right here on the Market Front Lines.